Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. You know what it is. Lock in. It's time to go beyond the trade.
The information discussed on Beyond the Trade is for educational entertainment purposes only. Nothing you hear on this podcast should be taken as financial advice. Always do your own research and consult a licensed professional before making any investment decisions.
There's a huge difference between the market going to all-time highs and what people are actually seeing in their bank accounts. We're here to bridge that gap. We want to provide technical details for those who, want very in-depth technical help, but we also want to provide all sorts of basic education to the masses. We're here to just bridge that gap for free 99, the best cost of anything, and just give back to the community. Feel free to always give us feedback, and we're looking forward to continuing to do this. And this is something that we're sticking to no matter what happens. 0 views, 1,000 views, we don't even care.
Yep, don't matter. But it'd be nice if those listening want to chime in either on X, wherever. Message us personally. I don't care. To let us know what you'd like us to talk about or some ideas you might have, etc. We're open to all of it.
Yeah. Perfect, man. Yeah. We're here for a good time and a long time. But you'll see.
It gives us an excuse to talk once a week. I like it.
Exactly. And, try to get some helpful info out for the masses.
Absolutely.
But first off, last week, I think, first of all, we kind of saw a little bit of a pullback from the Fed, shifting its stance a little bit. Powell had a couple, I know he had one speech last week, and he kind of seemed to go backwards on the dovish tone that everybody sensed was happening. And of course, when everybody says, okay, we're in the easing cycle, we cut 25 basis points, we're going to expect another couple cuts for the next couple of meetings. And when everybody's kind of in that boat, I feel like Powell has to kind of recalibrate expectations, which I think is what he did last week. And hence you see some red candles up here. I think him just recalibrating expectations is something important for the markets. Honestly, I thought we were going to come down to maybe 640s, high 640s, because, when you're constantly making all-time highs, I think a nice little 2.5 point dip down through this low volume range, I think probably would have been a good pullback, and we may still see that after. I know we were talking before this episode started how on Thursday there was a high volume dip buy and a candle that closed its price right where it opened. That's generally a bullish indicator, but then the low volume on Friday was kind of a low conviction move, so I could still see a move down to about 650.
Yeah, I think looking at the volume is going to be key to how this week's working out. If the volume's down, it's very much more leaning towards people are questioning the market and everybody's unsure.
Right. And you see this weekly chart here. It's a doji, right? It opened where it closed. It's right in the middle. There's a wick on both sides, and it's on high volume. It means that there was some hesitation in last week's move.
Yeah, absolutely.
There's a lot of different narratives that are going on. Indices are indecisive, I would say. One that has been, kind of a rocket ship lately, total V-shaped correction, was the Russell 2000 was actually made all-time highs last week.
Crazy.
But you see again, high volume, and it's indecisive. So everybody, I think this is a perfect segue into what we're gonna talk about today in EDU, which is FOMO, right? Don't get it here. I can easily, and Mike, correct me if I'm wrong, but I can totally see a little cup and handle formation on IWM going down to about 230, picking back up and going back near all-time highs. I think the recalibration from J. Powell is going to cause a little dip in the market, especially your growth and especially your small cap interest rate dependent stocks.
Yeah, I don't know. You talk about FOMO. I kind of had it some last week with there were some big moves at some point, but then there was also big corrections right behind it that yeah, I've been playing longer out on options, so it doesn't really bother me too much. But
Mm-hmm.
when you wake up in the morning in the first 5 minutes, you're up, several $1,000s, and then by 11 o'clock, you're back at even.
Right. Right.
But I don't know. It gets frustrating, but it's just the way the market moves.
And at that point, did you take profit? I mean, we can get right into kind of the analysis of our weeks. Did you take some profit? Did you just want to sit there and wait on it? What was your thought process?
I had a mixed box. I probably had more than I cared to have on AMD, so I was able to get rid of some of those.
Okay, I'll
I'm
pull
made
that up.
profit there, but now I'm kind of back to just above break even, I believe. Yeah.
Okay. Now this is
So there was a big move, but it came back down. It's like, hindsight, right? I wish, well, I could have dumped it all there and pocketed the money and then got back in, but I wasn't ready to, and I had a lot of time left on those options. So
yeah, this is a choppy one here. Yeah, since that earnings release right here, the August earnings release, it was a quick short squeeze, kind of pop back up, and now
hmm
back, to 185, down from, one below 160, and then within days was back to 185, now building that base. But I could easily see here, I mean, it looks like it's rounding off a nice base here, right?
yeah, and to me, it looks like it's just been consolidating here.
Exactly. And when you zoom out super far, you kind of see this may be that basing candle on the month. Obviously, September is almost over, um, but you could potentially see, if we're going to call this the bottom, see something like this, and then maybe a little bit like that, and then a move upwards. Kind of mirroring what you see here. If you just flip it halfway, it's just mirroring this. But yeah, it's basing.
So I'm half out. I still have a good size position in end of October calls, so we'll wait and see on that one a little bit. Um, if it makes a big move to the downside tomorrow, I will probably get out of it.
Yeah. Okay. I mean, I could easily, I mean, if you look at this volume profile, there's kind of a gap for those beginning. This chart on the right is volume over, well, the bottom is volume over time, right? So this is how many shares were traded in this week. I'm looking at the weekly candle. This is based on the visible chart, so I can adjust it, but it's the amount of shares traded at that specific price. So it's just a different axis. So you can kind of see
hmm
where are most of the transactions happening. And it's called on TradingView, this is called visible range volume profile. And so if I adjust the visible range, I'm going to see this volume profile change a little bit. So make sure you're looking at relevant days. But yeah,
Yeah, it shows you where people are interested and where they're not interested. I mean, it's a great indicator.
and the general rule of thumb is the higher volume nodes are going to be more difficult to kind of break through, whereas price will move quickly through lower volume nodes. So on AMD particularly, you see it's kind of below this 160 volume node, which heavily correlates to a psychological round number of 10, which people trade at. And you see there's a low volume node all the way down to about 140. Not saying it's going to go there, just saying that it could go there quickly. And if you look back to July of 2024, you saw a move from precisely the same spot, literally the exact same, almost to the T. It might be the exact same number. High of 186.65, high of 187.28. And then it goes all the way down to 121. So I like this trade though, and it reminds me of
Yeah,
one that I took this week. Um,
which was what? What did you take? You called some bangers out the last couple of weeks.
of course, I'm not going to talk much about Applied Digital and CoreWeave, right now because I've just only talked about them. I don't particularly like. I'll update you, I guess. I still hold my positions, and I plan to. I don't particularly like the volume in these candles. There's a lot of insider selling here because the lockup on CoreWeave ended here. If you go you can go to a website, just type in CRWV Form 4, and then there's a website that updates you with all the insider trades. And the pre-IPO owners and private equity group that owned CoreWeave, most of CoreWeave, I think like 20% of the company they sell millions of shares every single day. So there's a little bit of selling pressure there. I'm still watching this 114 level in particular as kind of a risk level. I don't love the high volume. Like, this is the highest volume week of all time for CoreWeave, and it was a red week. Not good.
Okay.
Applied, ran all the way up to 25.5 and kind of took a big hit. Low volume dropping, which I just high volume up, and it's a low volume kind of covering the area that it just raced past. So I'm fine with the way that things look right now, but I think there could be a bigger pullback in store. Not worried about it. Trade that I like, ARM. So this is a company that is owned almost entirely by SoftBank. It's owned, I think, 80 or 90% by SoftBank, which is the South Korean Masayoshi Son group. This was a spin-off of NVIDIA, went public back in 2024 and has been up ever since. So the amount of shares that are trading are very limited. The tradable float is small because SoftBank isn't selling, in kind of contrast to CoreWeave.
Okay.
I just think it's building a nice base here. This is also NVIDIA's second biggest stock holding. So NVIDIA's biggest holding is CoreWeave. NVIDIA's second biggest holding, there's a large drop. Second is ARM, and then third or fourth is Applied Digital. So you could say that I'm kind of just following NVIDIA, which would probably be, in my eyes, a good decision. So, but here, I like the way that it's kind of building a little cup and handle here since April, and then top of the cup being about 165, and now we're down kind of near the bottom of this range. I see this as a long-term hold opportunity. I like the way that it's holding. It may come down to 125s again. I think that's kind of our last line of defense. But I've heard good things about the company. Did a little digging, a little bit of research. Feel good about it, and I think this is one that I want to hold for a long time.
All right, I made notes. We're gonna keep this one on the list and see how we do here.
I entered at about 141, so I'm down a tiny bit, but it wasn't. I mean, I'm trying to build a position. Another one that I discussed is BLND. I did say that BLND would come back to 380, and it did. You see this high volume node here. Bought it at about 377, the lows of Wednesday, and then it went straight up to 392 the next day. So it was a quick trade if you took that gain. But I'm holding this for the higher. Obviously, this is an interest rate sensitive stock. With the recalibration from Jerome, I think that this is just kind of doing a little correction that is going to get bought.
So, a question for you: when you, I mean, these are not normally on my watch list, right?
Yeah.
Where are you going how are you doing your research to find some of the positions that you seek out for long-term holds?
Yeah. It's a lot of it is talking to people. I think a lot of and this is watch list building is something that you kind of just have to be super creative. And you see some stocks that I've been in and out of on the side here. When you talk to people, or you learn about what people use in their daily life, maybe what they're seeing, what they're thinking about a market, whether it be home loan refinancing or the software that you use at work. I think a lot of my thoughts come from that, and then once I have a thought about a specific market, I then dig into the players in that market. Okay, so say I really want exposure to cybersecurity. I'm going to dig into Palo Alto Networks, CrowdStrike, Fortinet, probably a couple more. Sentinel One is another low one, but I don't own any Sentinel One, nor do I plan to. But I find all the players, and honestly, now with the power of AI and ChatGPT, it is so easy to research everything.
It makes it quick,
It
that's
is
for sure.
it is so easy to research everything. Um, you know, I live in Austin. I drive by ARM's office every day. Um, and then I look and I see Nvidia owns part of them and they aren't selling it and it's owned 80% by SoftBank and it's basing. To me, that's a great long-term hold position. Um, and another one that I do have some of is people would laugh, Appfolio, which nobody really talks about. It's a company that it's for, I guess, like private equity groups, investor. It's kind of an investor portal for private equity where you can send out capital calls and fulfill them, and then you can also get your distributions all through that. It's all linked. It's kind of like an investor uh, portal for private equity. But
Okay.
if you look at this, I mean, it's literally a perfect chart. If you zoom all the way out, this stock has just gone straight up, right? Great. For it sometimes lower volume stocks, less traded stocks, just trade easier, honestly. But if you look at this, it had a 20% candle on earnings. 20%.
Wow.
And then it came all the way back down and retested this level, which also was previous resist. I mean, perfect. Appfolio at
Levels, 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 man.
levels don't lie. And so
They
I
don't.
I bought some Appfolio in the 260s, and my guess is now that it made all-time highs, it's just kind of basing off of the previous. I mean, you broke through resistance. Now it becomes support. Now it's just going to trickle, 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 and eventually fill this. Maybe come down and test it eventually, and then boom, it's just going to keep going up. So
Nice.
conversations, use AI to dig into the players, understand their profitability, where they stand in the competitive rankings with its peers, and then look at the chart. And I've also got kind of a data center uh, watch list. So you can see this here on the right.
Yeah, and if
Nebius.
anybody that hasn't used like ChatGPT to do this, it's pretty simple. I mean, and you don't have to be real exact. You can drill down through it. So if you went into ChatGPT and said, "Show me all companies that publicly trade that are involved with um, nuclear power on a micro scale, specific to data centers," you're not going to get 100 stocks. You're going to get maybe two or three companies, and that's it.
Exactly.
And then from there, you can deep dive into them. And, I mean, that's how you get ahead of things, right? I mean, you see something, same with AI. I mean, it's going to give you a bunch of stuff when you ask those questions, but you can drill through it and get it down to a really small amount of actual companies that one trade publicly. And very quickly, you'll be able to weed through the ones that you really have no interest in based on their performance.
Mm-hmm.
But it gives you, there's so much data, and things that would take you hours to do before, you can do in minutes.
Exactly. And it's amazing. It truly is. You can ask it for specific financials, specific, recent insider sales, tables and charts of everything you could want. It's literally perfect. Just like Acro was saying, it's all about have an original thought, because if you're seeing somebody on Twitter talk about something like, wow, Nebius is up 40% today, you are late to the party.
Yeah.
You are late to the party, right? Once you see that, put it on a watch list, okay? Don't not watch it. Put it on a watch list and then wait for it to pull back. So I mean, just a random example, if I bought Appfolio, I'm like, wow, Appfolio is up 20%. I'm going to buy it now because it's going to go to the moon. No, set an alert. You can set an alert on TradingView, or just wait and watch it every day. Wait for it to pull back and then buy. That's exactly what I did with my Applied Digital portfolio or position. I saw this move where they called their first lease with CoreWeave. I waited all the way to the tens. I wanted it so bad. I knew it was going to go nuclear. but I had to wait for the pullback because it was going down every day. You don't want to buy that initial pop. You want to wait. And you see the same thing is happening here. Huge pop. It's going to pull back. Just know, have patience. And if you miss it, you miss it, right? Maybe you wanted applied to come down here to 770 because you wanted it to fill this gap from June 3rd. Well, you didn't get it. So dollar cost averaging also helps prevent FOMO.
And I think looking back, when you see that, where all of a sudden everybody's talking about it and there's this big pop, imagine that you got in at the right time before that pop. When would you be looking to sell? And chances are that's when you're looking at it 2-3 days later and you're going, well, I would have probably sold some here. Well, guess what? A lot of guys are thinking the same thing. You get in and then people are selling to get back out.
Right. A lot of times selling is best when you see those big headlines.
Mm-hmm.
Sometimes those big headlines, those news moves, sometimes they're multi-day moves and sometimes they're not. Like, for example, we can look at Tesla. Elon Musk was just constantly buying on the 12th, I believe. Yep, the candle went straight up. And if you bought the next day off of the news, you were break even pretty much, or maybe a tiny bit up until Friday, right? Yes, it's going up and it's kind of squeezing and it might hit all-time highs. Maybe we'll see. But once you see the news, it's kind of a little too late. But here on, theoretically on Tesla, I think it's very reasonable to see a pullback to probably 400. Not only is that a psychological number, but if you look at your exponential moving averages, you're way separated on a larger time frame. This is a weekly. It may continue to squeeze, it may continue to go up, just based purely on things that were out of shareholder control, which is Elon buying billions of shares or billions of dollars worth of shares. But
it's sitting right now. I mean, looking at my own chart, it's at a level that I have marked as kind of a key high level. It's the last level I have.
Right.
It's 441.
Well, there you go. Yeah, right here.
Mm-hmm.
Right here. Another.
This actually ended up being my savior for the week. I mean, I said I had some really big green days and I had some big red days, and the week was a wash until Friday. I bought only a couple of contracts on Tesla, but I bought end of November, which I'd never go that far out on it.
Yeah.
And they were pricey, so I sized it way down, but ended up almost $1,200 on 2 contracts in one day, half a day basically. And I held them. I'll see.
Until Friday. Right.
Well, no, I mean, I bought them Friday.
Oh, okay. Did you sell them Friday as well? Day trade?
No, I kept them. I'm holding them.
I'm bullish. I think this was a nice little inverse head and shoulders here. It continues to creep up. I think this one is one that is probably gonna blow.
Yeah. I mean, it was just one of those things that it hit another level. It came down off that bottom orb. When it broke the bottom orb back up, I got in on, but they were expensive contracts, so I didn't go crazy on it. I thought, well, yeah. I've never really gone that far out on Tesla. I think it's on a run that hasn't stopped yet. It's hitting a level that if it breaks that level, it's another leg up. So I'm like, okay, I'll take the chance. And it's worked out. So we'll see what happens at pre-market tomorrow. And I may have orders ready to go as soon as the market opens.
Exactly. And you just if you think strictly about think about the way that you're thinking, there are probably millions of other people, thousands, whatever, of other people thinking the exact same thing. Mm-hmm. Right? They said, I think Tesla is going to gap up. I'm going to sell. They sell, and then it prints a massive, opens high wick and then open and closes lower. Maybe it's a bearish engulfing candle, and then you get a pullback. So it's all about mentality. So as far as taking profit, if it's a trade for you, obviously a key resistance like all-time highs is not going to just go on the first attempt. I would say another good level on Tesla's 365. probably would take a little dip there. If this does break out, I would say it goes 465, comes down to 445, and then goes up. But yeah, taking profits is easy when you have a lot, a lot of profit on the
Yeah.
table. Man will never go broke taking profit. And to me, it's just about hitting key levels. It's tougher when you're looking at something that's at all time highs. That's always tough, you know. But for me, if I see a mass, if it's a trade and it's meant to be a temporary hold, I would sell it on the big candle. And then usually I'd wait another day because things don't just top and bottom after one day. There's usually some absorption or there's a move that shows indifference, which on Applied Digital
Mm-hmm.
was Tuesday, the 23rd of September. It closed exactly where it opened and had wicks on both sides, right? The exact same thing that you see on, on SPY. If those are on high volume, it's bad. You should probably sell, and there's probably going to be a little correction coming. But here,
I feel like that's the thing that a lot of people miss, though, and that they keep holding and then wonder why they gave back most or all of their profit.
yeah, uh,
It's not, I mean, that's a
this
great
line was
pointer
pretty
right there.
accurate. Yeah, I mean, I could easily see SPY going down to 465 and then going up. I mean, I think that there needs to be some sort of pullback, but um, maybe there's not, which brings me to
Well, I
FOMO.
mean, well, the thing even before we get into the FOMO is we have to also consider that we're staring a government shutdown in the face right now.
October 1st, right?
Right. So that will have a big effect on where the market goes.
That's
I mean, and if
yeah.
people are anticipating it, I think it could be a interesting week or so.
Those government shutdown weeks, all of them over time, they always make the market, concerned. And so any
Yeah.
uncertainty probably is going to
You got
make people
defense
sell.
is going to pull back. I mean, a lot of things pull back on that kind of news. So it's something to keep an eye on and see where it goes. Who knows at this point, but I mean, it's looking like there is going to be a shutdown. How long is the next question?
Yeah. Hmm. So, I mean, again, big catalyst for this week and a reason to be careful. Don't buy the first dip every time. I think kind of like we've talked about, when building a position, you want to wait until you see some sort of indifference at that price where buyers seem to be meeting sellers, sellers seem to be meeting buyers. Things do not top and bottom in one day. They just don't. They'll retest that level multiple times. If you go look at SPY, even in April, right? Even with this whole deal with the turfs, it kind of hit these same levels 4 days in a row. You had multiple days of opportunity. And shoot, you could have even done it again on the 10th of April. Do not have FOMO when you're not in a position. I think the most important thing is when you see that news headline, when you see that big candle or that, big line up and you says, gosh dang it, I knew I should have been in that stock. You have to wait for the pullback. Do not FOMO into it. Maybe it goes up, but more likely than not, it's going to come back and give you an opportunity, because what goes up must come down. There's always, even when a narrative or a stock or a story seems red hot, even when it seems red hot, you always have to remember that there's a time when that narrative calms down.
Yeah,
How do you deal with FOMO, Mike?
it's a tough one. I don't. I guess I've gotten more patient over the years and that's just screen time, seeing what happens, thinking, oh, this thing's ripping, I'm going to get in. And sometimes you can be right by doing that. But in most cases, you'll learn over time to wait for a pullback for sure. One that, I mean, I'm not a big Bitcoin guy by any means, but one that comes to mind is iBit.
Mm,
When I first heard of that, I went and looked it up, and I'm like, oh man, this thing's rocking. And I'm just looking at my screen. I have
Got
So when
IPIP
I first saw it, it was 52.81. And I'm going, okay, this is interesting. I read up on it a little bit. So I made a line on TradingView at 52.81. And I made a note that this was my first look, watch for a pullback. Well, I mean, if you look at it, it really hasn't had a pullback since then.
Mm-hmm.
So at this point, I have no interest in getting in it. But now, a couple of years ago, I may have gotten in at the top and thinking, "Oh, this thing's going to keep going," But I don't know. It's to me, I slowed down in my trading since a couple of years ago.
Yeah.
More patient.
And it, you're always going to see, if you're on Twitter or X or you're on YouTube or anything, there's always going to be people hyping up stocks, talking about their gains, especially seeing gains. X is the most toxic thing when you're seeing
Oh
other
God, yeah,
other people. Like, I'm happy to see other people win, but when you're losing or you missed out on something and then you go look at that specific stock and it just gnaws at you, right? FOMO's the number one killer of consistency in my eyes. Like,
hmm
you're you're
I
you're
paid my
you're
FOMO tuition on GME back in the day.
oh man. I mean, it just, you think it's going to go up forever and you miss it, but there are, missing one move is irrelevant if you catch the next 100, right? If you can't focus on one trade, there's always another trade. There's always one. Even if you think the AI boom has already happened, okay, well, either A, wait for a pullback, or B, dig up that one that nobody's found yet.
Yeah,
And
and I mean, and there are indicators you can use, but I mean, we can only use so many before you start confusing yourself and one's overriding another. But if you're looking at EMAs or things like that on a longer time frame, they are indicating to you that's probably not a good time to get in, and most times they're right. I mean, so find an indicator that works for you. And everybody's trading style is different, so it's how long are you planning to hold? Are you buying options? Are you buying commons? What time frames do you like to trade in? I mean, when
yes.
I started, I was trading a 1 minute time frame.
Mm-hmm.
It was killing me.
Chasing comes from hyper focusing on lower time frames. If you
Yep.
zoom out, you see the big picture.
And I'll typically, for myself, I will watch the 5 minute mostly, but I'm always going to the 30, the 1 hour, and the daily. And that's as a day trader trading options. I mean, that works for me, but nothing under 5 minutes.
Yep. I mean, it, that makes looking at a 1 minute or even a 3 minute, it makes you emotional.
Oh
And,
my God.
it's important to, if you do fall to FOMO, it's important to document these trades, journal your trades, keep that one up on your watch list maybe to remind you of that mistake that you made, right?
Yep.
Even up on the side with your successful ones, because you've got to remember the failures. The only L's we take are lessons. It's one of my favorite things to say because it's true.
It is. It's very true.
You learn more from the losers than the winners by a mile. When you're a winner, you think, "Wow, you're like, I'm great. I'm the best at this." And it's really easy to think that you're the best at this when everything is going up, like right now.
Exactly. The market's been a very easy market to trade in for the most part
Exactly.
for a long time now.
I mean, just
Perma bulls, perma bears, they have their time and then they give everything back. You got to be able to switch sides. You just have to. And that's a hard lesson to learn.
and for me, if I'm holding a equities position that I'm just either A, trading for, a certain move, whether that be, Appfolio moving back up 20% to the highs there, but then I sell it, or it's a play that I'm holding for, longer than that. If it's having a red day and I just know it's having a red day, just stop looking at it. Just do not let it control you, because the more that you continue to look, oh my God, it's down 3%. Oh, it's down 5%. Oh, it's down 7%. The more that you give into that, the more that you're letting it control you. In an options situation, that shouldn't be you shouldn't be you know turning your screen off. You should probably be aware. Unless it's a longer dated option and it's still falling within your trade plan, that's fine.
Right.
Mike, I know you still made money on UNH even though it was down for a little bit. You still made money on Tesla even though it was down for a little bit. People who are day trading or shorter term trading options, make sure you're babysitting them. But when something still falls within your plan and it's still doing exactly what you planned for it, if it's stinking up the room, just don't look at it. But
Right.
have your alert set and always have a plan.
Yep. And please, if you're trading options and you sell for profit, please don't go back and look where that would have been 3 days later because
Oh,
it's now up. It'll drive you crazy.
the woulda, coulda, shoulda are
Yeah. I mean,
the
you're
three.
never going to catch the top. You're never going to catch the bottom. Be happy to catch part of the move, put some money in your pocket, grow your account, but don't go back and look at last week's move. And, oh my gosh, if I'd have held that, I'd have been up another $10,000. Well, you could have easily been down 10,000 too.
Exactly. One thing for me that has always helped is selling a tiny bit of a position because I'll always want to hang on to something because I say, well, I don't want to sell, this option or I don't want to sell these 100 shares because I think it's going to go up way higher. But once you just clip a little bit, you realize and you feel what it's like. Oh, okay, I just put that plus 40% in my pocket.
Mm-hmm.
And then you start thinking like a normal human again, not like a little gremlin that's holding on to all of your shares. Right?
Yep. I mean, there's times I still go back and look out of curiosity because you knew or you thought, but again, I sell at a limit. So if it starts taking a dive down, I never let anything go more than 20% for the most part, negative. And all of a sudden, you see a big ripper a week later, and you go back and look at that options trade, and you're going, "Wow, if I had only had held and followed my plan." But there was a bigger downside to it. And are you willing to sit through all that pain and still be wrong and have it not come back? You're going to kill your account.
Yep. Yep. What would you say, Mike, was your biggest lesson that you learned this week? And if there's not a big one you learned this week, the last 2 or 3 weeks.
The biggest lesson I learned this past week was came from Boeing.
Okay.
It had ripped up over in pre-market,
Mm-hmm.
and I was up like 50, 60% on some contracts. And I'm thinking, oh man, this thing's going to keep ripping.
Yeah.
Well, what we just talked about, the other people in that trade took their profit.
Right here.
Yep. So it came right back down.
And then went right back up. I'm sure you were livid.
Yeah. But I didn't sell it, and I should have sold. I could not get my sale order in fast enough when the market opened, and then it started to come down a little bit. So I'm like, I'm waiting for it to go back up, and it never did. So I closed. Yeah, I closed part of that for a fraction of what it should have been.
This is exactly what we were talking about. It's just the cells of the people who were building up positions. If,
Mm-hmm.
for example, a lot of people probably saw that headline, thought they got FOMO, right? Bought it open, and then got screwed. And
Yep.
then you probably sold down here panicking because you thought it was going to go all the way back down to fill the gap. And then it went right back up and actually higher. And then you probably threw your computer out the window, right?
Well, but see, Boeing moves strange. It's I don't even know how to explain it, but I've done very well with it over the time. But if you blow that up on the 5 minute for Friday,
Yeah.
where that big red candle coming down is, I was in a panic mode at that point. I mean, you're talking a couple $1,000s up to being now a couple $100 negative.
Oh, whew.
It was that
Yeah.
big of a move.
Yikes.
And it did come right back up. And okay, I set my order again to sell at the second high,
Uh-huh.
and it completely reversed again. It like took the wind right out of my sails. So I got out of about half of them. I'm still holding a little bit of it.
Okay. I mean, it's still bullish, but look,
Yeah, I still made money on it, but I didn't make nearly as much money as I should have. But that was my lesson, is what I kind of realized when news comes out like that and you have a huge pre-market move, you're probably better off closing or getting out of a large part of that position right at open without hopium that it's going to continue to follow that move up higher, because looking back, it usually doesn't.
You have to think about everybody else that's doing the same thing.
Yep. A lot of people that are smarter than me and more well versed on knowing what I just said, when it takes a jump like that, chances are it's going to come back and retrace. So get out as soon as you can to secure your profit. That
See
was my
green.
big learn this week.
Huh. I love that. I love that. See green, take green, right? Think
Yeah,
about what other people
absolutely.
are thinking about. Um, for me, I think when you keep seeing a name or something pop up that you've researched a good amount, I think the lesson that I learned is just try to have some exposure there. I'm heavily involved in the AI data center, yeah, trade, and one that I missed was NBIS, which is unfortunate. I kept seeing, actually, what I was waiting for was a pullback. I was waiting for NBIS to come down to about 56, right? So
Wow.
I missed this move on August 7th when Nebius went from 55 to 65. I saw it coming here. I was waiting for a pullback, right? I was waiting for a pullback. They're like an AI data center infrastructure, kind of like a quasi core weave mix. I don't profess to understand it fully, but I wanted to move back to 55, and if I didn't get 55, I was going to miss the trade, and that's okay. So I had patience there. But I think when it hit 63, for example, I could have had a little bit of exposure because I kept seeing this stock pull up. I think I should have started dollar cost averaging because I was being patient, right? It hit 76. It came down to the low 60s. It was there for multiple days. And then they got a contract with OpenAI or with Microsoft, and now it's at 110. So I think, to me, if you trust your research, if you've researched it plenty, and you've been patient and you're kind of waiting for the perfect entry, just start dollar cost averaging when it's close, right?
Yeah.
When it's close to get some exposure, because to be honest with you, it's one of those that I keep seeing it on my watch list and it ticks me off because I liked the trade and it left me. But I'm not buying here. I'm not buying here, and I'm not going to. I have my stocks that I picked, and I'm cool with that.
That was like Oklo. I've
Yeah,
been watching it and watching and watching. All of a sudden, it started popping, and it just, it's got a little pullback coming now, but it's
yeah.
still not where I would be comfortable buying it.
For me, that would be 85.
Yeah.
Got to come back
Yeah.
to
And
these
with something that I
previous.
do a lot of times, like some of these, to make sure that it stays in my mind and I'm watching it, because you can get sidetracked on other things going on, other industry news, buy one share.
Yeah,
It's now in your
yeah, yeah.
portfolio. You see it, you're watching it, and all of a sudden you'll start thinking, wait a minute, this thing's up 5%. You can at least be a little bit more early than catching it at the end of the day when it's up 12%. So I have a lot of those in my account that I have one share.
I love that. I'm gonna start doing. I love that. I mean, actually, you know what this chart reminds me of? It reminds me pretty much exactly of this one.
Oh, yeah. Look back.
If I did a side by side, I mean, I think this could go, but that has nothing to do with the fundamentals of the company. That's just the chart, purely. I don't know much about this, but I love that buying one share. One share of Tesla is a little more expensive than one share of Oklo, but
Right. You're right. But I mean, again, but even with that,
fractional
if you want to
shares.
buy, if you want to get into Tesla, buy the is it TSS or TLSS, the leveraged trade on Tesla.
But yeah, one of the smaller ones. Yeah, I know what you're talking about. I don't know the ticker. I think it's TLSS maybe. I don't know.
TLSS, I think that's it. So I did the same thing with the buy one share, right? So I was intrigued by it. TSLL, that's it.
Yeah, two times
And
leveraged.
yeah, so it's
Interesting.
daily calls basically that they're buying.
Yeah.
And I got in that thing, I don't know, I could tell you here in a second. Let me look at my portfolio. But it's kind of an example of just that buying one share.
Yep.
I bought one just over a month ago at $13. It's $20.71 at close.
Nice.
So it keeps my mind on it. And when I see Tesla take a big dip, and I'm kind of assured with my levels, et cetera, that it's probably going to make a big run, it's a great day to buy TSLL.
Yeah, yeah, and when you have a tiny exposure, you can add a little bit when you see it either basing there or
Mm-hmm.
pulling back, basing. I think that's great. That's a great tip. It's a great tip.
And
And
it's $22 versus buying Tesla at its regular price. You can own it, and it's 2 times leverage. So if you're
yeah,
on that day, you're right. You're doubling up.
yeah, that or yeah, fractional share of Tesla. Like, do be be careful. This is 2 times leveraged, but for buying one share,
Right.
you're
Yeah,
probably
go
going to
up
be
twice
fine.
as fast. It can go down twice as fast
This
too.
is a Chick-fil-A meal in downtown Austin. Um, Well, I think this has been a great episode. This is
Yeah.
awesome. I think we'll wrap it up here. It's an exciting week ahead in the markets. Sensing we may feel some red here. I don't know, but I'm
Yeah,
excited
watch
for it.
out for that weekly long-legged doji on SPY is concerning. I think we might see a lot of chop, or who knows. At this point, I'm unsure. Then we have the government shutdown looming. We have for the week on economic calendar, Tuesday you got Jolt's jobs report, which is going to be a big one. Wednesday PMI, and Friday non-farm payroll. So those are the three big ones, I guess, for and unemployment as well on Friday.
Yeah, the usual ones.
Yep.
Well, everybody, be nimble, be smart, don't get FOMO. And Mike, always enjoy the time with you, man. Thank everybody. Thanks
Same
for
here,
tuning.
my friend.
Yeah, thanks for tuning in, Mike. Thanks for talking to me.
You bet. Thanks for having me.
Well, have a
And
good
go
have
Bears.
yeah, Bears get the win finally. I'm looking at the Cowboys right now, probably going to lose to the Packers, but we'll see how it goes. Everyone, thanks for tuning in and have a great one. Everybody have a great week.
We'll
Adios.
see you guys.